In this edition of Ask the Expert, I'm speaking to Bryce Anderson from Morningstar Investment Management. Bryce, thanks for your time today.
No problem.
Now, we're talking today about some of the opportunities that you guys are taking advantage of given the market sell-off and within the US in particular.
Sure. So it's been a pretty wild ride in US equities toward the end of the year. And I think between trade wars, select earnings downgrades in some key companies, as well as concerns over growth, that spooked investors and you saw a pretty significant sell-off. And I think whilst volatility is uncomfortable, as valuation-driven investors, it's when opportunities appear.
Yeah, I think that's something that's really interesting. It's a good point for investors to keep in mind when they're reading the negative press. But this is actually, like you're saying there, when the opportunities are out there for the professional investors like yourselves.
And I guess to that, and what opportunities have arisen. So for some time, we've felt that in aggregate, US equities is quite expensive. And I guess we still feel that way. But I think there are some select opportunities in the sell-off that we find are now a good entry point. And one of those is consumer staples.
And what is it about that sector that makes it appealing now? I think you were saying earlier that it's valuation driven.
Yeah, so it really is about value and price. It's about the price you pay. So this is a sector which has some challenges. It has some concerns over changing consumer trends and the like, but it's all about price. And as the prices have come off, it really provides an opportunity to access high quality companies at reasonable valuations.
And also, Bryce, so what sort of a role does this play within people's portfolios, and how much should they be focusing on say, consumer staples, for instance?
Sure. So for us, and in talking about our portfolios, it adds something quite different to what we have in the portfolios at the moment. So it provides a really good balance to our cyclical exposures that consumer staples has reasonably defensive earnings profile to go with its reasonable valuation.
Does this impact your holdings within that consumer cyclical area?
I think that, again, it's about looking at that part of the market through a valuation lens. And I think inside US equities, I think we find that part of the market still to be reasonably expensive, and the staples element is really where the value is. Taking
a broader view for a moment, what are some of the other areas that you're looking at, other areas of the portfolio?
Sure. So I think a take-home message is that despite the falls in equity markets, we still think broadly markets are expensive. And so in that environment, we hold elevated levels of cash, but you can still find select opportunities if you're willing to, I guess, be different. And so with that, we have positions in emerging markets, Japan, the UK. And then if we look at sort of a sector view, we have some select positions in financials, energy, and telcos.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.